Hello, everyone. Thank you for joining us. This session is titled Building Resilient Food Value Chains Through Financial Inclusion. My name is Michael Good. I work for the Disaster Risk Financing team for WFP at our headquarters here in Rome. And today I'm going to be joined by my two colleagues, Andrea Camargo, who is the team lead for the Inclusive Risk Financing, and Nora Praher, who is the Innovative Ventures Finance Venture Lead heading the SheCan team. Thank you guys for joining us. I think we'll just dive right into our session, and I'm just going to ask you guys a few questions to basically kind of explain to us a little bit more about the work that you do. Andrea, many people know the World Food Program predominantly for its emergency operations, including food distribution, but also cash-based transfers for people in need. Perhaps maybe you can explain to me a little bit more in detail about the work that WFP is doing in financial inclusion.
Thank you, Michael, and welcome everyone to our session. Yes, I think that it's a very important question. So I will start maybe answering by highlighting that financial inclusion is critical to respond to humanitarian needs and also to build resilience and create opportunities for communities. And this is precisely something that is very aligned with WFP mandate. And this is why we have been working with interventions that promote financial inclusion already for more than a decade. So let me just share in the screen a little bit how this work can be clustered. So the first interventions are linked with unlocking access to inclusive financial services through humanitarian cash transfers. You might know that WFP is the world's largest provider of humanitarian cash transfers. For instance, last year, we distributed $2.2 billion to 47 million people across 75 countries. And that really positions us very well because when delivering these cash transfers, we can be the gateway of financial inclusion. Why? Because we support the opening of mobile wallets and building all this payment ecosystem that effectively can serve to integrate other financial services. The second block of interventions are more related with very targeted actions that promote access to some financial services like credit, savings, and insurance. And I will mention some of these programs that integrate these activities. So the first one is the Smallholder Agricultural Market Support, SAMS, which is a program that actually promotes smallholder farmers' access to markets. And we know that financial inclusion is critical to do that. So this program has been unlocking savings, credit, and has been integrated as well insurance into their package of support. The second program, and that's the one that I'm leading, is inclusive risk financing work that we do, which basically borrows on the Rural Resilience Initiative that started in 2009 in Ethiopia, which promotes access to financial services to build resilient food value chains with a very important focus on climate. Then we have as well another intervention, which is Youth in Work program, which aims to strengthen the youth and women's jobs food systems. And again, financial services like savings, credit, and insurance have been also promoted. Last but not least, there is the SheCan intervention that Nora is leading, that supports access to affordable microloans to women. And the interventions that all these programs are promoting, we're really trying to bring them all together so we create a narrative of for all the work of financial inclusion of WFP. Over to you, Michael.
Thank you, Andrea. So Nora, I would like to hear a little bit more about the SheCan initiative that your team delivers. So this focuses on establishing access to affordable credit for WFP's beneficiaries, predominantly smallholder farmers and microentrepreneurs. Can you help the audience understand what that means in practice?
Sure. Thank you, Michael, and hello, everyone. So with SheCan, the initiative, we focus on addressing the gap between WFP's existing livelihood programs, also under SAMS and some other programs related to food value chains, and the access to productive capital that farmers oftentimes require at specific points in the season. To enable this access to formal financial services, so beyond SACCOs and more informal lending schemes, we work with the entire financial inclusion ecosystem in each country where we operate. And this is important to highlight because it's a quite scattered ecosystem. So there is firstly, obviously, the WFP beneficiaries, secondly, the local financial service providers, then the national government, and also international funders, meaning both donors and also investors. How through SheCan we engage with those four stakeholders. I'll quickly run through all the four, as it really, like, that's the bundle or the core of what we do, connecting all of them. So firstly, on the beneficiary level, we provide this targeted financial literacy training, focusing on understanding what it takes to access a loan and how to repay it. This training is also often bundled with digital payment methods training, given that this facilitates the repayment of the loans as well. On the financial service provider level, we collaborate with some of the selected players to then roll out such tailored and gender responsive loans to the target segment. So we do a needs assessment up front, and then like structure a loan with the selected providers to then roll this out. Thirdly, on the investor level, we seek to rally other impact investors to complement our contribution, which is grant-based, with appropriate investors to those participating financial service providers in order to achieve a blended finance approach, which is more sustainable. And lastly, on the government level, we focus on interacting with the ministries that are in charge of the country's financial inclusion strategy to really ensure that what we do is integrated, what already happens at the country level, and is long lasting. In the concrete case of Malawi then, to highlight the outcomes of the operations there of the pilot. We ran it from November 2023 until October last year, and there we complemented what our country office colleagues already did regarding a livelihood support to smallholder farmers with tailored financial literacy trainings. We also selected two financial service provider partners, namely Vision Fund Malawi and FIFAD, and together with them, 12,000 loans, microloans, were extended during that pilot phase, of which 80% were women. At closure of the pilot, we were really happy to see a 0% default in all the loans that were extended. What that means in terms of the sustainability in partnerships is that the pilot really succeeded in demonstrating the credit worthiness of this client segment, smallholder farmers, which oftentimes are perceived as too risky to serve. We see that in the fact that Vision Fund actually keeps dispersing a second tranche of loans to the SheCan beneficiaries, even after we have already closed the pilot. Also with the other financial service provider, FIFAD, they continue lending as the support from the crowd lending platform Kiva, which came in as an impact investor, is also continued. Lastly, regarding government engagement, we deliver capacity strengthening to the government through the Village Savings Loan Association working group that already existed in the country to reinforce the national guidelines on financial literacy and VSLA building in general. As the pilot is closed, we're now standing there to evaluate, or have done our evaluation at the end, and we are now seeking to mobilize additional capital for the program to expand the financial product to up to 25,000 direct beneficiaries in the future.
Thank you, Nora. That sounds like very impactful work that you guys have been doing. Andrea, I would hope that maybe you could also explain the work of WFP on inclusive risk financing. And maybe you can give us an example of your experience in Malawi and the opportunities there to jointly scale up with SheCan.
Yeah, Michael. So the inclusive risk financing portfolio basically borrows on the Rural Resilience Initiative that I mentioned that started in 2009. That basically brings together different financial services to respond to different needs in terms of risk management. So initially we have like the risk transfer component, which ultimately aims to transfer risks that cannot be retained by the communities. And in this particular case, we work with climate risk insurance. Most of our projects are parametric insurance, and we are operating around 20 countries already. Also, we integrate this work with savings because it's very important to reinforce the retention capacity that communities have. So when there are events of a certain frequency and severity, they can effectively absorb those losses and bounce back quickly. And I wanted to highlight here that our work has been like predominantly building VSLAs, and you will see how that connects very well with what Nora was just presented. Also, we promote access to credit and financial education in the context of what we call the productive risk-taking, which ultimately aims to promote the mobilization of resources so communities can invest and can increase their productivity and at the same time being resilient. In the component of risk reduction, we also are looking at reinforcing access to financial services that can mobilize funds for adaptation mitigation. And what we're looking at is exploring with SheCan the possibility of unlocking access to credit that can effectively finance activities on at this level. Also, we are doing some work on forecast index insurance precisely to mobilize resources before the events take place, so the communities can effectively mobilize resources to prepare and mitigate the impact before it happens. So with all these initiatives that we have been promoted jointly with local partners and global stakeholders, we have been managed to unlock access to financial services to more than 10.5 million people. I just wanted to show very quickly some results of last year. You can access in with the QR code or disaster risk financing report that has this information. That basically we have managed to cover 3.1 million people with these solutions, and 50% of them are women. We have been doing this work in 21 countries. And again, this is not a work that we do by ourselves. We work with local insurance companies, with global insurance players, with governments, and with different stakeholders that help us to achieve these goals. Now, specifically for the case of Malawi, I wanted to highlight that we started actually in 2015. With the integrated climate risk management approach, which is basically this combination of financial instruments that I mentioned to you before. By today, which is like 10 years later, we have very interesting results. So for instance, if 65,000 households have access to climate risk insurance, 67% of them are women. And the products have been evolved over time because this has been a whole process of proof of concept. So at the moment, we're working with a partner, which is 1 Acre Fund, and we're looking at scaling up this scheme so it is integrated into national systems, which basically means integrating within programs that the government have in order to promote resilience of smallholder farmers, specifically related with access to inputs and credit. Also, in parallel, we have done a lot of work on the VSLA side. So we managed to create around 3,100 VSLAs and mobilize $500,000 in terms of savings. And in terms of the integration and the collaboration with SheCan, we think that it's critical to work together in Malawi to achieve the scale up and the graduation of VSLAs. We really like the work that they have done with Vision Fund, and we would really like to borrow from that and support these VSLAs that we have already supported with the ICRM project, so they can graduate to another level through the methodology that was applied by Vision Fund and SheCan in Malawi. That will be extremely helpful because we will be reinforcing that important component of risk retention. And in addition, we will be exploring some interlinkages between insurance, savings, and credit, so the uptake of the climate risk insurance can be leveraged on all this work that we'll be doing together. So this is how we see the integration, and we're very happy to collaborate to bring these different initiatives in the same country that are really looking at the same direction.
Thank you, Andrea. And I have another question for Nora. So after hearing about how credit, savings, and insurance can complement each other in Malawi, can you speak about the pilot program that is being rolled out in Iraq, which integrates the two approaches, and share any of the challenges that you faced while doing this?
Sure, I'll try to give that a go. So given that Andrea highlighted in Malawi, things happened regarding financial inclusion at different points in time in different regions of the country with different people involved or teams involved at WFP, and it just naturally came together because it makes sense to integrate our two approaches. And learning from this integration or organic complementarity from Malawi, we set us the intention to integrate the two programs from the get-go. So to really enable the beneficiaries to have access to both the affordable credit part from the get-go and to bundle it with the climate risk insurance. The advantages that we foresaw with this integrated approach were twofold. On the one hand, and the obvious one, the efficiency gains and the cost savings from a program's perspective, but also streamlining the engagement with all these different stakeholders of the ecosystem. So the outreach to financial service providers and the relationships that we've built, the government, et cetera, to really combine our efforts there and speak in one voice. But secondly, on the beneficiary level, to have the climate risk insurance work, so to say, as a collateral for the productive loans, meaning that the farmers would be able to access the productive loans to purchase their farm inputs at the right time of the season, but they would also be protected for a loan default in the case of a climate risk event that jeopardizes their harvest. So they wouldn't, as the harvest go down, they wouldn't be unable to repay the loan and then incur a loan default. Since this was our first time joint implementation and in a quite challenging context, it didn't come without its particular challenges. So I will get started on the challenges regarding the credit program implementation, and I'll pass it over to you, Andrea, to complement for the insurance part. From a SheCan perspective, what we saw as challenges in the context of Iraq were two critical challenges. On the one hand, there is a persistent extreme distrust in the financial service in the country due to its past, which just makes it really hard for any program involving financial service players or providers and financial products to find that broad acceptance and that scale that we're looking for. And specifically regarding loans, we also understood that there is a somewhat skewed perception when it comes to what are acceptable and economically sustainable loan fees, as the government has run different lending programs which were highly subsidized in the past, and that stuck with the populations that we're working with as well. On the other hand, there is also a persistent hardship regarding gender roles. So even to the part where female participants weren't able to leave their households to participate in the financial literacy trainings. And we did anticipate these challenges, both from the historical context, also to the cultural norms. However, even though we put in place things to measures to mitigate those challenges or those risks, we unfortunately see that the offtake on loans, the actual individuals willing and able to take a loan, is by far lower than we initially targeted. And finally, to add one more challenge, but more on a macro level, on a more high level, is that due to the political, the economical, and the legal context in the country, we also see that it's a lot more challenging in Iraq to find impact investors that are willing and able again to invest in financial service providers in the country, which are part of our program, and that would enable to really scale the program and make it more sustainable for the future. I'll leave it at that, but curious to hear from Andrea's side regarding challenges in Iraq.
Yeah, thank you, Nora. I probably will start with one, and I think that is related more about the awareness in terms of the climate exposure by financial service providers, because we thought that the financial service provider that is involved in the work with SheCan, they might be quantifying and assessing the impact of climate risk in their portfolio, maybe getting a sense in terms of like default rates linked to that. And unfortunately, that wasn't the case. And that's something actually that is not particular only in Iraq. We have identified this obstacle in other countries. So not having this awareness in terms of climate exposure really hinders the possibility of engaging into risk management solution, because if there is no awareness about the risk, why do I need to manage that risk, for instance, through insurance, and why should I should integrate it into my portfolio of solutions and maybe bring something new to my clients. So that, I think that it's an important obstacle, but I think that it's something that can be solvable. And I think that this is why we think that working with government is critical, because we have been engaging very closely with different governmental entities in Iraq. And something that is very clear is that they see climate risk as a critical factor that can affect systematically the country and specifically the financial system. And there is effectively willingness to ensure that the financial service providers are more conscious about that climate risk, and they take measures in order to address that. So in that sense, we're working very closely with the government to make sure that that happens, and also maybe integrating credit and insurance, not directly now with the financial service providers, but bringing the government as a critical partner and ensuring that they promote this integration in national programs that promote access to credit to unlock opportunities for entrepreneurs. For instance, there is a program in Iraq that is called Riyada, and this is where we think that probably that will be the first entry point. So this is maybe the challenge and a way how we're thinking that this can be solved. And maybe just to finish, something that we have identified as well in Iraq is that this product that was developed, the climate risk insurance product that provides coverage against drought and heat waves, solves also other problems of the government that go beyond access to finance. So they are like elements like short responsive social protection, the interest to promote value chain resilience through these solutions. So we are exploring precisely with the government how to scale up these solutions under those agendas. So this is a little bit the beauty of these instruments, that you can position them to solve different concerns and priorities at the governmental level, and hopefully scale them up.
Well, thank you both. I feel like we could keep diving into this topic, because it's so much breadth of experience and information. But just as a final wrap up, can you guys tell me what is the main lesson or key insight from implementing credit, savings, and insurance programs across different markets, and what are some of the enabling factors that help ensure their success?
I can go first. I think I'm reiterating the point on partnerships and exit strategy / sustainability. So I would say it's really the importance of designing those interventions with that exit strategy, i.e. leading the program, the interventions from the get-go, and establishing those collaborations, as Andrea just mentioned, with the government, with the local financial market players, but also the private sector, like development financial institutions, impact investors, and really the whole breadth of the ecosystem, so that once WFP, as sort of the grant provider, are building these interventions up from the grassroots, from the get-go, other players have appetite to actually continue those pilot operations, and they're integrated in the national structures and policies once we phase out.
Yeah, maybe from my side, I think that two main lessons is that integration is critical for the sustainability of these financial instruments. If you want to ensure uptake and scale up, it's critical to bring them together. However, another lesson is that sometimes not all stakeholders are aware of that, and the multiplier impact, basically, or effect that can effectively achieve bringing all these instruments together. So in that sense, the enabling factors that could help to ensure the success of this integration is like, I think that, to reiterate what Nora mentioned, the private public partnerships they are critical. Also, it's very important to prove the concept, because if you don't show in reality through experience how a financial instrument can be integrated and the benefits that has for the different stakeholders, it's very difficult to really have a tangible example and like do something about it. So I think that proving the concept through these pilots is critical. And the third point is the capacity strengthening. So we need to raise awareness about this, but we need to make sure that the stakeholders that participate in these schemes, they have like the tools so they can own these schemes on the mid and long term, because, and with that, I would like to finish. WFP is just an enabler. Ultimately, in the work that we do on financial inclusion, we're just an enabler to promote the development of financial inclusion markets, so vulnerable populations can benefit from it. So in that case, we really need to make sure that governments, financial service providers, and other stakeholders really have the tools so they can own the systems. So in the mid and long term, they can like completely independent from us, and we can phase out maybe from some capacity strengthening focused areas rather than like full implementation as we are like currently doing.
Thank you very much, both of you, and thank you to our audience for joining this session. And I hope the information that was shared was valuable, and that you got a nice overview of how WFP is bringing together financial services to build resilient food value chains.
Thank you.
Thank you, everyone. Bye.
Bye.